Hi, welcome to another Prospectus review here on Grow Invest. So today we're going to be going through the NCB Financial Group APO Prospectus that was just released yesterday. So I've spent the last 24 hours going through this prospectus, and we're going to go through the salient points of it and to help you get an understanding of the offer. So let me first say, of course, that anything that is discussed here is for education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell NCB Financial Group or any other securities. Right? So for our prospectus review, we typically go through a few sections, and of course, we'll say where the discussion leads us as you ask your questions, as we go through the different points. We may see if there's anything else that we are interested in going through. So it's not a set agenda, but at the very least, these are the areas that I'm going to go through. So we're going to start with a little bit of company history. I'm going to take for granted that most of you have heard about NCB before. So I'm just going to go through just a high-level understanding of the company. Next, we look at the offer. So how much they're seeking to raise, how many shares that are going to be issued, and more. So we're going to go through that. And then after which we go through the financials. So we're going to look at the last 5 years, talk about how their revenues have been trending, how their profits have been trending. And then, of course, we look at their dividend policy. And then finally, we close out with how to apply. Now, this is going to be a 1 in 3 part series, this video, because I do have some other videos lined up for you. So we'll be interviewing the CEO of NCB Financial Group, Robert Almeida, next week, Wednesday. So depending on when you're watching this interview may be coming up or it might have passed. And we'll also be meeting with the CEO of NCB Capital Markets, that's Angus Young. And then a week after that, we're going to do a Q&A. So usually when we have offers out, we like to close it out with a Q&A just in case we didn't capture it on the prospectus review or the CEO interview. So you can look out for that Q&A about 2 weeks from now or a week and a half from now. And that should give you a very good understanding of the offer and help you to decide what you're going to do, right? So we do these sessions to help you get an understanding, and then you speak to your licensed financial advisor or you make your own informed decision as to what you want to do. So that's a plan. So let us get started. So let's start with the company history. So the NCB Financial Group is a financial holding company currently for 4 direct subsidiaries. That's National Commercial Bank. That's, the bank we all know. You have NCB Global Holdings Limited. You have the majority shareholder for Guardian Holdings Limited. That's GHL. You have the L.E.A.R.N Group Limited. And you have TFOB 2021, which most of us know provides the link services, etc. And then we have the CEO for the group, which is Robert Almeida, someone who we've interviewed before. So I recommend that you check out that interview, because in that discussion would have gone through, some of the changes that have gone through in the last year, what that means for the company, where their focus is, the pillars that they're driving for now, and things of that nature. So that's an excellent interview to serve as a basis for some of the things you'll see in the prospectus. So be sure to check that out on our channel. And here now we have, let me just try and zoom in here. So here we have the different subsidiaries of the group. Now it is quite a bit, but I'm just going to go through these very quickly, just so that you understand and appreciate everything that NCB Financial Group does, right? So you have the consumer, corporate, commercial banking. So that's everything that you may know from the banking side: personal banking, private banking, commercial banking, etc. Then you have payment services. So that's going to be their credit card issuing, card acquiring, mobile wallet. So of course, services like Link, etc. Then you have some subsidiaries that you may not be familiar with, but are equally important here. So you have treasury and correspondent banking. You have wealth and asset management, as well as investment banking. Then you have the the insurance side that is split between life and health insurance and pension fund, and then general insurance, right? So again, but I've spoken about these groups and subsidiaries in the interview with Robert. So be sure to listen into that interview and get some further context as to the focus of all of these companies. Just some key milestones for NCB over the last 10 years, right? There, the prospectus actually goes into great detail as to maybe the last 100 years, some of the key milestones of the company. So be sure to read the prospectus. Everything that you're going to see in this deck is taken from the prospectus. So that's good to refer to when you're going through, right? So in 2013, we saw a 100% acquisition of Advantage General Insurance Company. In 2015, we see where NCB Capital Markets was incorporated and launched NCB Capital Markets in Barbados. Then we see in 2016, a 29% stake in Guardian Holdings was acquired. 2017 was where we saw NCB Jamaica shares being delisted and NCB Financial Group shares being listed in its place. So some of you, if you were investing at that time, you'd have known about that. In 2018, they would have acquired a 50.1% majority stake in L.E.A.R.N Group Limited. And then in 2019, they would have gotten some additional shareholding in Guardian Holdings. And of course, one of the things I spoke to Robert about is that, at the time, I remember in 2018, 2019, there were talks of NCB possibly listing on the New York Stock Exchange and some other things. So we spoke about that in our interview. And I see where Renee has linked it in the chat. So be sure to check that out after this prospectus review. What we've seen in the last 9 months or so, or maybe a little bit more, from you are seeing the major changes in NCB. I know one of the things that you probably heard a lot if you were watching these interviews and investor briefings, etc., just like I have, is the focus on efficiency, governance, and the customer experience. So on the efficiency side, we've seen the changes that they would have made, downsizing of certain areas of the company, sort of cost-cutting measures, or focus on more efficient operations in different ways. And then we've heard a lot about increased focus on governance. They want to be sure that everything is as it should be, and that they're building a solid governance framework. And then finally, we've heard a lot as well about the customer experience being paramount for them. So we spoke about things like, ATM uptime and some of the threats in terms of, hackers in terms of the different personal accounts, and just them wanting to ensure that they're focusing on that side of the business. Now, one of the things that I noted from this that I have been a little bit challenged with, but learning to adjust to the new norm was, for example, the recent change of the transfer limits, right? So there are things that they would have been focusing there to help to minimize breaches of customer accounts, increase ATM uptime, and just other things that they're working on to ensure that the customer experience is improved. And again, would have touched on that in my interview with Robert. So I see Shelly-Ann asking, didn't NCB cut ties with Link? Well, so TFOB 2021 Shelly-Ann is the company that I think that company is Link. So it's still a part of the group from my understanding. Now, if somebody in the chat has another understanding, please let me know. And good evening, Orville. Good evening, everyone who is joining us live. All right, so that's the overview of the company. Again, I'm going to take for granted that you understand a little bit about the financial group, and so I'm not going to really go into too many details there. But again, the prospectus would have gone through this in good detail for us. So let's look at the offer now, right? So they're seeking to issue 78,500,000 new ordinary shares, and they have now the ability to upsize this to a maximum of 117,750,000 new ordinary shares. right? So these are so in an additional public offer, you're already listed, and what you're doing is issuing additional shares to new or existing shareholders. So you'll have more shares outstanding for the company, right? And we have 2 price points to focus on here. So the price for the new ordinary shares is 65 Jamaican dollars, or if you are part of the employee reserved pool, you'll get it for $58.50. This is the current number of issued shares as at the date of the prospectus that I'm reviewing. So we have 2.5 billion shares outstanding for NCB. And what you're seeing on the right is the number of issued ordinary shares in the event that the invitation is fully subscribed with the 78 million new shares. And of course, if it is upsized, it will, of course, add to that existing number, right? So it'll move from 2.5 billion shares outstanding to 2.623 billion shares outstanding. What you're seeing here, and let me see if I can zoom in just a little bit more. What you're seeing here is just a breakdown of the top 10 largest shareholders as at December 31st, 2023. And what it's showing here in the graphic down to the bottom right is how that ownership position will change if the offer is fully subscribed, right? So again, in an APO, so you notice the number of shares, for example, for AIC Barbados Limited, which is the #1 shareholder, would be reduced from 49.57% to 48.09%. And that's what happens when new shares are offered. Existing share ownership percentage is reduced, right? Hopefully that makes sense. And that's what some persons would refer to as your shares being diluted, right? And we have here as well current shareholders profile. Now, as at September 30th, you had 44,807 shareholders. And what it's showing here is, again, the percentage ownership changing, of course, if the offer is fully subscribed. So just wanted to give you an understanding of that. So with 44,000 shareholders, of course, there are a lot of shareholders that have the opportunity to take advantage of the offer if they so choose. And what this is showing you is the percentage ownership and how that will be affected. All right. Shellen is asking if people are actually using Link. Shellen, I don't know. I wouldn't be able to speak to that. We'd have to have somebody from the team speaking about that. But I do know that what I have not seen in the last few months, I'm not seeing the same level of marketing from Link. Now, I don't know if that's just a change in focus, but I remember right before the internal, changes and things like that we were seeing, they would have launched, I think, a MoneyGram partnership or something like that. I remember the ads were just all over the place. So, yeah, so you're saying like the JA selling groups on Facebook, I think people will be accepting payment via Link. So I do know I did go to a company. I went to a handful of places. Now, here's the thing I always ask. I know that, for example, we went to Mr. Breakfast once. We had breakfast, and then we're like, do you accept payment via Link? And they said yes, so we're able to pay for it there. Not many other places I've seen. Now, I don't know if I'm just not asking at the right places, but again, somebody from Link would be best able to speak to that. All right, and you're also seeing here the number of ordinary shares authorized and preference shares authorized. And what this means when it says unlimited is that they have the opportunity, as they move forward, to issue more shares, right? The number of shares that they're able to issue is not capped. So that's why it says you're unlimited. And so that's just important to know. And of course, it shows on the right the current number of issued and fully paid ordinary shares, which is 2.5 billion. All right, so some final details about the offer. The date of the prospectus is the 26th of April, 2024. The opening date is May 6th. Now, the offer is available for persons who would like to apply on the Go IPO platform. We're going to talk about that a little later. The closing date is May 27th. Now, based on the size of the offer, this is not likely to be one of those offers that close early because of the sheer number of shares and the amount of capital they're seeking to raise, right? I've never seen an APO open on, well, close on opening day. So just know that you'll have some time, and that's why you have the opportunity to watch this review, read the prospectus, tune into our other videos on the topic, and then you'll be able to make an informed decision, right? Minimum subscription is 100 new ordinary shares. So that's $6,500 is the minimum. And then, of course, if you are an NCB employee, then you'll be able to get it for $58.50. It says the basis of allotment is within 6 days of the closing date, so May 27th. And then you see here, of course, June 3rd. That's the basis of allotment. Now, they also said that refunds will be 10 business days after the announcement of the basis of allotment, right? And then the listing of shares, usually this is 21 days from closing date, but here the prospectus actually says they'll try to list the shares as soon as conveniently possible, right? I think those are the exact words, so just bear that in mind. Use of proceeds, and this is certainly an area that I'm gonna discuss with Robert and Angus for next week. It says the gross proceeds of the invitation, assuming that it is fully subscribed at the invitation price of $65 per share, will be $5.097 billion, of which approximately 66 million is expected to use to pay transaction costs. Now, even though NCB Capital Markets is the lead broker here, which is an NCB company, there is a transaction cost, right? Because that's a core business for NCB Capital Markets, which is to do the capital raise for them. And so, of course, there are fees that have to be paid out. That's what we're seeing here. And it's usually a percentage of the amount being raised or some standard fee. I'm not sure how it's calculated really, but they're showing you here that is a part of their expenses. So the net amount now is expected to be $5.030 billion, and they are hoping to use these funds as a part of their deliberate plan to reallocate capital with a focus on reducing debt and bolstering capital in the NCB Financial Group. Now, if you've watched our channel before, you know, for me, this is a little bit vague. So I'm going to need to know, for example, which debt, you know, specifically they're hoping to clear and how much really is going to capital out of the 5 billion. Those are two questions, you know, right off the bat that I would have. And so, of course, we're hoping to get those answered. And then they also said this APO is one of multiple strategies that the financial group is pursuing to reallocate capital. What that line tells me is that we're likely to see other things. I don't know if it's other capital raises. I don't know if it's, you know, things like bonds or other, you know, vehicles to raise capital. I do believe that there's an NCB bond out as well right now. So there are things like that they're hoping to use to acquire capital and to, you know, continue to implement the strategy that they've set out to do. All right, so let me pause here, see if there are any questions. I see some comments here. Well, Ayana is saying she hasn't seen anything about links since January. Yes, I've noticed that as well. So, yeah. Orville, so based on how the slides are done, well, yes, I think I can probably still zoom. Okay, noted. I was going to say I can't zoom, but I think I can. All right. All right, so in terms of the financial highlights, and this would have been as at December 31st, and this is even though they would have had a quarter since, this is like, so prospectuses take a while to fully prepare, and so these highlights would have probably been prepared assuming that they were hoping to do the APO in Q1, but we're just a few weeks removed from the quarter ending March 31st, so of course, those financials should be coming out soon in case you want to see the most recent ones. But in terms of the quarter ending December 31st, which I believe is their Q1, they had 5.97 billion in net profit, 196 billion in equity, and would have done a stock review for NCB maybe about 2 months ago. And so if you want to get into the finer details of this quarter, be sure to watch that video. Total assets stand at 2.2 trillion, earnings per share at $1.32, And of course, their return on assets stand at 1.08% for the quarter, and return on equity almost 8%. So right here, and let me see now if I can do the zooming that Orville is asking, because we certainly want to get into this a little bit, right? So just give me 1 second. Let me try and bring this in a little closer. Let me actually view it directly from the prospectus. All right, so I'm going to share my screen. Let me know if that's a little better to read now. If it seems a little blurry, just let me know. I want to pause before I zoom in one more time. Just let me know if you're able to see it. That may be too far. Okay, this should be a lot better, and I'll just scroll across, right? So what we're seeing here are the financials for the last 5 years. So we're going to focus mainly, I think we can all agree that, all companies would have been impacted in 2020. So I did see a note though, just a difference in some of these numbers as it relates to 2019 and 2023. But I thought that was interesting, right? So we have here net interest income going from 44 billion in 2019, and of course it says here that these are in millions, right? So if this is million, then this is actually trillion, right? 44 trillion. 44,000 million. Yes, okay. I'm sorry. And then that's at 62. Let me just speak in thousands. It's easier so that I don't get confused. So I went from 44,000 here to 62,000 for 2023. So would have seen improvement over the 5 years there. Net fees and commissions from 19,000 to 28,000. But of course, net revenues, which is the final line here, we're seeing an improvement from 76,000 to 113,000, right? And then it shows you, of course, that there would have been an increase from last year to this year. And of course, most of these areas you're seeing improvement from 2022, right? So those are all good signs. On the insurance side, we're seeing their net revenues from insurance activities increasing from 14,000 here to 24,000 for 2023. And then of course, operating income, 137,000 here. Again, multiply that by millions, up from 91,000 in 2019, right? So these numbers would have been improving in terms of performance. What I also noted, of course, on the expenses side now is staff costs would have almost doubled in the last 5 years, right? So you see 32 million in 2019 and 32,000 here, and then 60,000. Now, of course, I've been seeing this a lot with companies. It costs more to retain talent. Compensation packages have been increasing. And so I'm not surprised to see this number, but for it to double in the last 5 years just shows you the kind of environment that we're operating in and what it costs to retain talent, right? Then we have their expenses going from 32,000 here in 2019 to 57,000, right? So their other operating expenses here, they're kind of lumping all of their expenses into one category here. And then of course we have the net profit going from 29,000 here in 2019 to just 7,000, which of course that's the 7 billion that we would have seen, right? So earnings per share would have gone from $12 here to $3.30. So of course that would have been at about a 75% decrease there. So that is significant. Dividends per stock unit would have been better in 2019. I think they usually paid back then maybe multiple dividends for the year. And what we would have seen in the last maybe year or so, they've paid about $1 in dividend. So that is something that they would have had the recommitment to start paying dividends again, and so that we would have seen that, and we'll get to the dividend details shortly. All right, and we have some numbers here. We have investment securities, net loans, total assets, customer deposits, etc. So customer deposits have grown. Investment securities have grown, net loans have grown. So all of these numbers are trending upwards. Customer deposits have grown. Repurchase agreements, liabilities on the annuity and insurance contracts have grown. Other borrowed funds, which again for me is a key focus because their intent is to pay down debt. So you want to, of course, watch this area here. And when you translate this into millions, that's a lot of borrowed funds, right? Then we have equity would have grown from 183,000 here to 223. And of course, for anybody just joining us, these numbers are in millions, right? So I'm just stating them in thousands for simplicity. You have to ensure to multiply by the relevant factor. Next, we have some key ratios, and I'll just focus on a few here, just the profitability ratios. So we've seen where, compared to where they were 5 years ago, these ratios have actually been trending downwards. So that's the return on average total assets and the return on average equity. So again, it would make sense that they're seeming to focus on things like efficiency, focus on things to generate more profits and so on to improve those numbers, right? Because these return figures are based on profitability at a company, right? Net revenues from banking activities to operating income from 84% to 82%. So that's mainly in the same range. Net insurance revenues to operating income from 15% to 17%. That has actually increased. Cost to income ratio from 67% to almost 83%. So that has grown. Insurance loss ratio from 61% to almost 72%, right? And then we have some other information here. What I wanted to highlight and discuss here was the market price, right? So if you remember in 2019, market price was almost $250 here. So it stands at $249 in 2019, and it would have closed out the year at $208, right? So above $200, anybody would have been investing again from that time would remember these days. And it would have closed last year at almost $70, right? So that is a ways down from where it was. Again, this is one of the things that I've spoken to Robert about. What do they think they can do to get their share price back to former levels? And again, I really encourage you to check out that interview if you have not done so as yet. And then, of course, they're also on the Trinidad and Tobago Stock Exchange, and they're showing the prices there for those same 5 years. All right. So hopefully that was helpful in terms of a financial review. Let's go to just one other section I wanted to focus on, which is the profitability per segment. Let me share that here. So the profitability per segment, we're seeing consumer and SME banking in terms of improvements from 2022 to 2023, payment services, corporate and commercial banking. And we see where, if you look down to the bottom, life and health insurance is one of their more profitable segments. So of course, you see where the consumer side contributes versus things like wealth management, insurance, treasury, etc. All right, let's look at their dividend policy. Let me zoom in here. So dividend policy says that the board of directors will declare at its discretion will declare at its discretion dividends to shareholders. These dividends will be paid from realized earnings of the company. The dividends will be subject to a maximum of 50% of the net profits earned each year after taking into consideration any regulatory or other requirements, right? So if whatever they're required to do in terms of compliance, then they'll do that, and then they'll be able to pay dividends from that balance, right? So in the event that the payout is less than 50%, Board of Directors reserves the right to increase future distributions proportionately. Further, the board at its discretion may distribute to its shareholders the full amount of dividends received from its subsidiaries and realized gains arising from non-recurring or extraordinary transactions. All right, so that last part here is pretty much saying that they have the opportunity to pay like a special dividend or so if it is that they're able to do a transaction that's maybe one-off, and then they're able to transfer those proceeds to shareholders by way of dividend, right? All right. And we would have seen, again, just with all the things we've heard, they had not paid a dividend throughout the pandemic, or they weren't paying consistent dividends, let me say it that way, before somebody attacks me here. But we saw where last year they would have returned to paying a dividend in December. That was a 50-cent dividend, and again in March, a 50-cent dividend. So at least over the last 6 months, they've paid a dividend twice. And so that is something that they would have mentioned. It's their commitment. It's something that they're moving towards, and they're hoping to be able to do more of as the quarters progress, right? So let's talk about how to apply. But before I go there, let me see what questions are in the chat or comments that we're having here. Finessing finance, definitely, once an offer is out, we're hoping to be able to go through it. So let me just address this one quickly. I know that this is about NCB, but Trans Jamaica Dividend, if you have the dividend mandate filled out, then you'd have likely seen your funds already, depending on where you are receiving those funds, right? So just give it some time. If you don't have a mandate, then your check will likely be in the mail, but it was literally supposed to be paid Wednesday of this week, so you have to give it some time. Finessing Finance is saying the Link staff had staff layoff, and since Link has not been in the media much. Yes, I heard about that, but I wasn't sure, so I didn't want to speak from a place of not being certain. I mean, if there's some layoff or reduction in team, then it could be that they're focusing on other things. That's usually how it works, right? I've been a part of companies that have downsized, and I mean, it's something that you're trying to just kind of figure out what you're doing, and so some things will get cut. The public won't hear from you in the same way, but it doesn't mean that they're not working and that the team is not doing, what they're doing. It's just, it may just be done in a different way, right? Let me see what L.E.A.R.N is saying here. Not really concerned if they're in the media. I've never seen their ads. I'm just wondering what percentage of the average Jamaican. Well, trust me, L.E.A.R.N, I've seen a lot of Link ads in the past, but I haven't seen them much for this year. All right. Let me just take a few more comments here before I go through the application process. So Finessing Finance is saying NCB is a money-making machine. Once rampant fraud is minimized and the customer service efficiency improves, and the more people will have confidence and want to invest in the institution. Michael is mentioning something about the US market. Michael, we're not addressing the US market right now. So just bear that in mind, please, but thanks for sharing. And Renee is saying, Shelly, and that would be great information to have. I suspect that the adaptation is low. Person still have an aversion to ATM, so you can imagine what it would take to boost adaptation for Link. So I will say this. I have tried multiple times to withdraw funds from an NCB machine using the Link app. That is certainly an area that I would want them to improve on. But again, I've never spoken with somebody from the team about it. So I don't know if it's something I did wrong and I just needed to maybe do it a different way, but I followed the instructions on the machine and I wasn't able to get my funds, meaning it reduced the funds from the account, but I didn't actually get the funds in my hands. All right. Okay, so I think there are no questions here. Michael is asking, the company that I'm speaking about trades on the point sheets. I'm not sure. So Michael, we're talking about NCB Financial Group, listed on the Jamaica Stock Exchange main market. They have an additional public offer that's out right now, so we're reviewing the prospectus. Kimar is asking, how do I think the addition of shares to the market will impact the stock price? No, I don't know. That's what I'll say. No, it's an interesting time to do an APO, I would say. And so I don't think they would have released it if they didn't think they would have the opportunity to get the funds. Now you've seen there when we did that slide with the number of shareholders, right? Over 44,000 shareholders, right? So I believe they're the company with one of the largest number of shareholders. Now that with such a large set of shareholders, if at a certain percentage of that would take up the offer, then they likely do just fine, right? But it really depends on the marketing of the offer. That's what it really comes down to, and whether or not persons have the I wouldn't say whether or not persons have the capital, because I feel the capital is there, because we have seen other preference share offers, for example, come to market. We saw an offer from Mayberry recently, etc. So we've seen offers come out and they have gotten the funds that they're looking for. So I don't believe that the capital is not there. It's just whether or not persons are interested, specifically in this offer. In terms of impact to stock price, at the point of the prospectus release, the stock is trading lower than the APO offer price, unless of course you're an NCB employee, but the stock did trade higher today, right? So the benefit of an APO, I would say, or just offers like this, is that you have the opportunity to get as many shares as you want, right? So whereas on the market, you may have to, so for example, on the market, you may see shares spread out. Actually, let's have a look at the queue. Let's do that, right? We're gonna have a look at the queue in a minute. So Shellen is asking, what do I think they'll do with the APO money? So they've said two things, right? Bolster capital and repay debt. And of course, I'm actually going to go to the audited financials. So this review is going to last an hour. I actually finished my slides earlier than I thought. So I'm going to go through the audited financials and see if we can have a look at their debt position, to talk about what that would mean. And then, of course, I'm going to spend a few minutes showing you how to go through and do the application on Go IPO, just in case you're interested. I said I would go through that as well, right? So Michael, no, it doesn't trade in the US markets, not currently. Yes, so the use of proceeds, I mentioned it already, so we're good. Shelley-Ann thinks the stock price will drop. Notice there is no discount for existing shareholders. So what I think that this was, and this is what I've seen. So we saw where the 138 offer, was it the 138 or was it the Fosrich? I think it was the Fosrich APO where the asking price of the APO was higher than how it was trading. Now what persons have to understand is that an APO, the process of approval for the prospectus, right, takes a lot longer than most people realize. Now, we saw where the price was, I think, at the end of the year, which is close to $70. If they started working on the APO from then, come up with an offer price of, let's say, $65 based on, let's say it was at $70 or something like that, and they thought $65 would have been a reasonable price. However long the document takes to be approved by the FSC and go through that process, that offer price that they create at the start will not change, right? Because the prospectus is a legal document. So if they even want to go through so much as changing the price, I believe they have to go through the process again, which is why most companies would opt for having a price that, I mean, the price is not likely to change is what I'll say, right? Shellen is saying, I don't like companies taking my money to repay debt. That means poor money management. Not necessarily, Shellen. Now, the cost of capital is now high, right? We're seeing that with interest rates. So if a company has the opportunity to issue equity, issue shares to get capital, that doesn't incur interest. So if they're able to now substitute that capital for debt that they may be paying, let's say they're paying somewhere between 5 and 10% or 15%, let's say, right, for argument's sake, you're now able to issue shares through an APO that is interest free, right? And then you're able to reduce that debt, which will increase profitability, which will serve investors by the way of more dividends being paid, more profits being realized by the company, etc. Right? So that's my take. Thank you, Orville. It's a rights issue for Fosrich, not APO. Thank you for that. Right? So hope that makes sense to you, Shelley. And so it's not necessarily a bad thing. It's just something that companies may be taking up the opportunity to do in this climate because interest rates are high, and high interest rates impact everybody, right? So just bear that in mind. So what I wanted to do is go through let me just look at the application process first, then we'll spend some time looking at the audited numbers. I think that makes sense, right? So as a part of the prospectus in Appendix 3, it shows you how to apply using the Go IPO platform. Now, I did note that there were no other brokers that is providing this offer. It's going through NCB Capital Markets. So bear that in mind. If you have an NCB account, you can create a Go IPO account. Or let me confirm, I believe you should be able to use Go IPO even if you don't have an NCB account. You probably have to just do like a bank transfer or something to that effect. But Go IPO is where you would go. Now I'm assuming that NCB can market the offer to its thousands of clients, its thousands of capital markets clients, all the 44,000 persons who own NCB shares currently. And so maybe that's why they decided not to have any other brokers with this offer. I'm not sure. It's just NCB's Go IPO platform is what we have as the main platform. So that's what I'll go through, right? So let me go to goipo.com. Stop sharing again for a second and just show you what that looks like. So Shelley says, I will hear more in the other interviews. Remember they had to pay up billions. Yes, I do remember that as well. And so, yes, that is what we recommend, right? Watch the prospectus review, read the prospectus for yourself, watch the CEO interview that we have coming up next week, watch the Q&A that we have, because you have time to go through, right? So you don't necessarily have to rush. Just note the key dates and make a decision within a reasonable time to, decide what you want to do from there, right? So let me share screen one more time. Sharing my screen now, and you should see the Go IPO platform, right? So you go to goipo.jncb.com. Now I'm already signed up on the platform, but if you are not signed up, you'd go to the sign up screen here. You'd enter your details, TRN, contact number, etc. Continue, go through the sign up process. And as I said, if you have an NCB account and you have online banking, you can use those credentials and log in. So in my case, that's what I'm going to do here. Let me stop sharing again so I can log in. Don't want any issues. All right, so once you're logged in, let me share my screen once more. Once you're logged in, it will show you Now I'm not gonna scroll down because you're gonna see what IPOs I would have applied for in the past. But let me go to IPOs here, and you'll see the offer is here and the pre-open sticker is there. If you go to view details, then you have an option to view the prospectus here. You'll see details about the company. You'll see the different pools. So there's the employee reserve pool, and then there's a general pool. If you're not a part of the employee pool, you'd have to go to the general public pool and just go through the process there, right? So if you click on apply now, it will walk you through the process. Now to the bottom left here, you'll see funding accounts, and that's where you would have, if you have an NCB account, it will show there. I'm not gonna scroll down because it's gonna show my personal NCB account, but you see all the details here: general pool, number of units available, unit price, minimum units, the increment of those units. So of course, if you want a certain number of shares or you have a certain amount of capital, you'd enter that amount here. So let's say I wanted to have $50,000. I'd have the ability to get 750 shares, and it's showing me that my cost would be here $49,572.50 because there's a flat fee for offers of $172.50, right? From here, I would just go through the process, verify my information, ensure I have enough funds in my bank account. And once I've gone through that process, it'll submit an application. I'll get a confirmation via email. And then once the offer has closed, within the allotted time, it will tell you, whether or not you've gotten the amounts that you have requested. And then, of course, if there are any refunds to be issued, it will go through that process from there. Now, this is shown in detail in the prospectus. So let me go through that and show you. I want to just show you that it's, please forgive the scroll. I know that can be a little hard for some persons to follow. So in Appendix 3, it goes through the entire process of showing you how to sign up for the account, how to apply for the shares, all of that stuff. So if you're interested in applying, go to Appendix 3 of the prospectus. It's linked anywhere you're watching this video, and it'll go through all of those steps for you, right? So that's a benefit of looking there to go through it. And yeah. All right. Okay, so let me go to now the audited financials for last year, as well as go through just a little bit of the stock history, right? Let me share my screen one more time. So we're looking at the company as at today. Now this is Friday, April 26th, at the day that we're reviewing the stock price. So we're seeing that it ended the day at $61.84, and that's up 1.68%. And this is the price for the trading for the last 6 months. So we've seen lows of about $60 and highs of about $72, right? In the last 6 months. When we go 3 months, we're seeing highs of maybe around $70, and in the last month, what I've seen maybe about $67 being the high, right? A couple of days ago, it actually traded down to $60.47, and then of course went back up to 64, then found its way back down. Now it seems to be on the way back up, right? And we see 98,000 units traded today. So the prospectus came out yesterday. To see that many units traded the next day is interesting to see. Now, one person is speculating that the price will go up. We will see how it trades over the next few weeks leading up to the offer being open and closed, right? But remember, what I was saying is that the benefit of offers like this, let's say that you are somebody who wanted to buy 10,000 shares. I wanted to show the queue. Let me share the queue with you, right? I did want to look at that. So Michael, we do trade on US exchanges. We're just not covering that topic right now, right? So about 2 weeks ago, we had a class on investing in the US markets. So there's something that we do cover here. All right, so I wanted to look at the Q. So I just wanted to make the example here, right? So you're looking at the Q, and what I was saying, what if you wanted to buy, let's say you wanted to buy 100,000 units, right? If you're looking at the sell side, you have to fill, let's say, the first maybe 10 orders in the queue, right? And what that would mean is that sometimes when you want to buy a large number of units, or any institution or anybody else wants to do that, the benefit of an offer is that you're getting a fixed price. You don't have to be at the mercy of the queue where the price goes all the way up to $199, right? So the benefit of an offer, you have a large bulk of shares that you can buy at a set price. You're also saving on fees, right? So anybody who so somebody may say, well, it's cheaper in the queue. You'll have to pay fees if you buy on the open market. Now, if the price is much lower, that's different. But if you buy it at $65 in the queue versus $65 on the APO, you're going to pay 1 to 2% in fees if you buy it on the open market. If you buy it through the offer, you're paying $172, right? So just note that caveat, that when you purchase through an offer, you pay a flat fee instead of having to pay the standard fee for your broker, which may vary from 1 to 2%. All right, so I just wanted to show that so you understand what we're talking about here. So I wanted to look at the audited financials for last year to get an understanding of as to what their debt position is, right? All right, so I'm gonna do a little searching first and then I'll bring it back up. Let me see a question here from Angelis. Says, I'm sorry, I'm not Jamaican. I was curious if there are any capital gain taxes. No, there is not currently, thankfully. Hopefully that never changes. And Orville saying people are going to buy on the open market cheaper than offer price. Again, Orville, it depends, right? Because you may say, well, $62 cheaper, $63 cheaper. What is that broker fee? It all depends on how much you're going to pay in fees, because that additional amount you're paying in fees could really be buying more shares, right? So it may be a lower nominal price, but just bear in mind that you have to factor in fees and how much you're paying, and the fees do add up. All right, so I'm looking through the audited financials, and what I'm trying to do is get an understanding as to their debt position. So as I look for that, let me know if you have any questions. We're pretty much done with the review. We're going to wrap up in a few minutes, but I just want to go through their debt position based on the fact that they're using this APO to clear debt. So I'm looking through their audited financials in the hope that we can see their debt position, and then will arm us with questions for the CEO when we meet with them next, right? Let me see something here. I think someone might have sent, I think David Rose might have sent it to me. I apologize here. Let me see if I can find it. Let's see where David, okay, no, 34, I think. Okay, I think I found it. Okay, all right, so I'm going to share my screen. All right, so it says here, how do I zoom in? Let me escape because I don't know how to zoom in that way. So let me zoom in this way. Okay, hopefully you're able to see it. So this is other borrowed funds. So we're looking to see just some of the debt that they have and the commentary on it. And again, we're going to ask, specifically, for example, which debt they plan to clear, how much they're going to apply to it, things of that nature, right? So we just want to have an understanding that of what the debts are, right? So it says here under note 34 for their audited financials for September 30, 2023. This is their debt position, right? So we're looking at the company here. So we have a DBJ line item here that's blank. We have corporate notes, which stands here at 78 billion, and that would be up from 69 billion in 2022. National Housing Trust line item is blank. There's an other here for 14 billion. And so, of course, the total you're seeing is 93 billion, right? So let's see what it says, because it's supposed to now give you a breakdown, right? So for B says corporate notes are both unsecured and secured variable and fixed rates notes issued in a combination of Jamaican and US dollars. The notes are payable between 2022 and 2025. The fixed rate notes attract an interest rate between 4.25 and 9.75%, and the variable rate notes attract interest based on weighted average treasury bill yield plus 2.25 to 2.5%, right? So again, using the example that I gave earlier, Shelly-Ann, they would have, it says here they have corporate notes. So these are bonds and similar type instruments where they've issued and now they have to repay, right? So this could be an example of funds that they're going to use from the APO to now repay those note holders, right? That, again, I'm assuming I'll ask, but that's one of the ways in which they may apply the proceeds. Let me see the other loans here. It says other, that's D. It says here on March 31, 2022, NCB Global Holdings Limited extended an unsecured loan of US 55 million to NCB Financial Group. Interest is due and payable on a semi-annual basis, calculated at a rate at 7.35% per annum. All right, so the principal is due and payable on maturity March 31st, 2025. So that's a year from now, right? Less than a year from now, right? And then it has some other facilities here, right? So US 55 million, US 10 million here, that's due March 31st. US 25 million, that's due March 27th. So all these would have actually been, these two would have been due recently, due already. And so, of course, we have this one here, loan of 4.5 million US to NCB Financial Group. Interest is due and payable at a rate of 9.12%. So you're noticing these notes and the percentage here, they're using, I guess, equity to get down this amount. Let me calculate. So they're hoping to raise 5 billion. And if you divide that by US, that's maybe about 32 million US, right? So that 32 million US could probably help to pay. So these two here, US 10 million, US 25 million, that'd be 35 million US. That's was due March 31st, right? So for example, I don't know if it's being used to clear these two, but you get an idea, right? So if they're able to raise a 5 billion, that would be equivalent to about 32 million US. It would help them to clear these debts that would be currently outstanding, right? Hopefully that's making sense, but this is, again, we're not sure. This is me just looking at the prospectus, looking at the audited financials and making an assumption. So of course, this is why we want to interview the CEO and get specifics, because their use of proceeds was at a very high level. It didn't say we're going to clear this specific debt. So I'm not sure, we'll have to ask them. But of course, it would seem to me that at the very least, they want to honor their debt obligations from what we're seeing there, maybe clear up some other things, and necessarily reallocate capital, right? So those are the things that we have questions for at this point. So let me know if you have any questions. Let me just, for those who have joined us, let me just recap the offer. Let me go to that slide specifically. So the offer opens officially on May 6th, closes on May 27th. Minimum is 100 ordinary new shares at $65 per share. So that's 6,500 Jamaican dollars minimum. And then, of course, those dates in terms of basis of allotment, etc. The amount of shares being issued is 78.5 million. And of course, they have the ability to upsize to 117 million new shares. And that amount should give them over $5 billion. And the use of proceeds, according to the prospectus, is to pay their expenses, which is a 66 million. And then, of course, to reallocate capital with a focus of reducing debt and bolstering capital in the NCB Financial Group. That's what they've stated is how they plan to use the funds. And so, of course, we want to take the next steps, go through the interviews, and then you as the investor can decide whether or not this offer is right for you. All right. Let me see if there are any questions. So Shelly-Ann is saying, I want the CEO to go into details about the growth plans because I'm not on the payback debt thing. I don't think NCB stock price will go back to $100 before 2050. Shelly-Ann, that's a very long time. But of course, I mean, I don't make speculations about stock price. What I look for personally in companies, what are the plans for growth? So I agree with you there about growth plans. So that's one of the things we'll be asking. We did have the conversation about that already. But of course, we're going to be asking specifically through the lens of how the APO will help them to get that. And then finally, Shelly-Ann saying it's 4 years since COVID, time flying, 2050 is not that far away. I was just thinking that I don't know if I'll be reviewing stocks in 2050. That's 26 years from now. Would anybody be listening to me reviewing stocks as a 75-year-old? Who knows, right? 75, 65, 65-year-old. All right. So, and all the analysis have said they don't see the market making any big jump for this year. We're already midway 2024. I see your point, Shelly-Ann, but look at it this way, and this is my general thought. I'll try and keep this very brief because we're over our time, right? But I think in this climate that we have right now, it is a good opportunity to invest in general. Now, it's a general statement. This is not specific to NCB. What that means is that I believe all companies, this now includes NCB, are trading at clearly lows that we haven't seen since 2019, right? What that means is that for the companies that you like, that you think have great plans for growth, that when the market recovers, when the economy recovers, are positioned to do really well, those are the companies that you want to be buying now, because when things recover, when we get back to 2019 levels and higher, you're going to say that you wish you bought more. Because I remember in 2018, 2019, a lot of the talk was, I wish I bought more, I wish I bought more, right? So this is the time to invest. I'm not necessarily concerned about the stock price in the short term for any company. I'm focused on making a solid decision based on where the company is headed. Now, the company in this case have stated their plans. You as the investor have to now make the decision. Has the company, given me enough information? If you don't have enough information, that's where you ask your questions. When you ask your questions, do the answers make you feel comfortable making a buying decision? If not, do you do more research? Or if you get an answer to your question, do you then say, well, okay, this offer is for me or this offer is not for me? That's all you do. So I do respect your position, Shelly-Ann, and you've always been open with your feedback and opinion, which is good. I'm just saying this now for the benefit of everybody else. So in general, I think it's a great time to invest. I think it's a good opportunity to invest, and you want to be thinking 2-3 years from now, when the market has hopefully recovered, when interest rates are back to normal, and we're going to see a lot of these prices be just nowhere near to where they would be at that point, right? So we don't know when things will recover. And so I'm not trying to time those things, right? I'm not trying to figure out interest rates. I'm not trying to figure out all of those things. So I'm just focusing on making the best investment decision, and then I'll worry about, what that would look like down the line, right? Hopefully that makes sense. Now, if there are no other questions, and I haven't seen any other, I want to thank you all for watching and checking out this review. Be sure to check out the other videos that we have coming. As I said, we have the CEO interview coming up. We have the live Q&A coming up. Please do watch the interview with Robert Almeida. We did it maybe 2 months ago. Please watch our NCB stock review. I'll ask you, Renee, to share the link again and watch those videos. Get a feel for the company, and so you'll be able to make an informed investment decision. So there are 173 persons on right now. Please, if you found value from this session, I see Richard saying it was very informative, please like the video. That's all I'm asking you to do. Like the video. It really does help our channel. Subscribe to the channel if you're brand new, if it's your first time, and like the video, please, and thank you. All right. So I hope to see you for the interview on Wednesday with Robert Almeida. Come with your questions, send them to us via DM or in our Telegram group. And then, of course, we'll ask the questions live. And then from there, again, you'll get more context as to the offer. But I would say don't overreact to anything until you've evaluated everything, right? Sometimes I think I've seen investors make some assumptions, and I think it's very important to ask questions, get the information, then make a decision, right? Finally, I'll say you're welcome to join our 12-month investment challenge. Now, we'll actually have our monthly call for April tomorrow. So it's still time to join for April. We'll be covering investment strategies, and I'm almost certain we're going to be discussing, for example, how to invest in offers and stuff like that, right? So if you want to join the investment challenge, you're welcome to do so. Again, thank you so much for watching. Please check out the other videos as I mentioned, and I hope to see you again soon.